Are you an investor who is looking for new alternate investments to further diversify your portfolio? Then you could have been introduced to Motilal Oswal Next $1 Trillion Opportunities Portfolio Alternate Investment Fund by your relationship manager. This is different from your usual traditional investment option. In this video, let us analyze the working and the performance of Motilal Oswal NTDOP so that we can make informed investment decisions. Welcome to holisticinvestment.in. Before getting into the features of this investment product, let us first look into the features of Category 3 fund, because Motilal Oswal NTDOP comes under Category 3 AIF. The minimum ticket size is 1 crore. It can be either open-ended or close-ended. The minimum corpus size is 20 crores. It can leverage position up to 2 times the total fund corpus. It is mandatory to make their earnings report public on a regular time interval. As an investor, you do not have to worry about the taxation rules, as these funds are taxable at the fund level. Next, we shall look at the features of Motilal Oswal NTDOP. The table here shows the features. From an investor's point of view, the minimum investment required probably is the one to be first considered before all other features. It is not only Motilal Oswal Next $1 Trillion Opportunities Portfolio, but all AIFs require a minimum of rupees 1 crore investment, which makes it obvious that these kind of funds is only for high net worth individuals. You may also have noticed that the fund has a Nifty 500 TRI as its benchmark. This product predominantly invests in emerging large and mid-cap stocks. Its investment strategy aims to invest in focused companies which are part of the next $1 trillion GDP growth opportunity. Next, we shall discuss the investment strategy of Motilal Oswal NTDOP. The 4 investment strategy are quality, growth, longevity, price, QGLP. Let me give you some points that will give you an idea of the above strategy. It strongly believes in long-term investing. The low churning of stocks and lower cost enhances the return. Identifying companies that have the potential to create wealth in the long run. Focusing on limited companies ranging from 25 to 30. Maintain a balance between growth and value picks. Investing in companies that are likely to earn 20 to 25% on their net worth going forward. Next, we shall look at the current portfolio. Motilal Oswal NTDOP follows the QGLP strategy as mentioned above to curate their portfolio by choosing stocks that will deliver better returns in the long run. By using this strategy, it has built a portfolio with 25 to 30 stocks on average at all times. The following table here shows the current sectorial allocation. From the table, it is easy to note that the majority of the sectorial allocation belongs to the banking sector, as the allocation comes to around 23.71%. The first 2 spots in the top 10 holdings also belongs to the banking sector, which is ICICI Bank and Kotak Mahindra Bank. Now let us look at the market cap. As mentioned before, this PMS product predominantly invests in the mid-cap and large-cap funds, and its allocation amounts to 51.5% and 45.2% respectively. Now, fee structure. The following table clearly shows the various fees charged under the fund. Depending upon the lump sum investment amount, a fixed management fee is charged ranging from 1.5% to 2.5%. In addition, it has an initial setup charge with a cap of 2%. There is no hurdle rate. Hurdle rate refers to the rate of return which the fund manager must beat before collecting any fee, but such hurdle rate is missing in this fund. Since Motilal Oswal NTDOP has no hurdle rate, the fund manager will continue to deduct the carry fee regardless of whether the fund generates a 2% return or a 12% return. In this context, the zero asset management fee may not be as attractive as it looks. Next, we shall look at the performance of Motilal Oswal NTDOP. The benchmark index for this fund is Nifty 500 TRI. The following is the periodic return CAGR of Motilal Oswal NTDOP in both long and short term. The data is as on 30th April 2023. Returns up to 1 year are absolute, above 1 year are CAGR. From analyzing the return over the past 5 years, it is clear that the fund has been able to outperform the index only in the long run. So investors can only reap the benefits if they consider investing for long term. Investing in AIF is similar to investing in equity mutual funds. Now we can do a comparison of whether the alpha investing in Motilal Oswal NTDOP is better and whether the risk and return are proportionate. First, let us look at some of the important category returns of some equity mutual funds to get an overall idea. The table here deposits the risk and return associated with each category under the equity category. Among all, equity small cap yields the highest return in the long run and it is the riskiest among the subcategories. Now let us look into specific fund returns. This will help us to have a greater insight into the performance of Motilal Oswal NTDOP. By analyzing the above table, we can understand the returns of NTDOP is similar to any large cap fund, but the risk, fee structure and transparency in the operation of NTDOP is nowhere comparable with the mutual fund schemes. The return is not proportionate to the degree of risk undertaken. Next, we shall shift focus on taxation. The returns stated above are post-tax returns. This category of fund is taxable at the fund level. This has no pass-through status. The highest tax rate as per the current slab is charged on the profit made by this fund. This tax is discharged by the fund on behalf of the investor. So, investors do not have to pay any additional tax separately. Tax on both realized and unrealized gains is factored in the NAV on ongoing basis. Thus, it is a post-tax post-management fee NAV. The rate at which a category 3 fund pays tax on each of these types of income is explained in this table here. Never test the depth of river with both your feet. Be it Motilal Oswal, NTDOP or any other investment, you can test their quality by putting them through 3 test filters. They are good track record regulation and simple and transparent. Filter 1 is Motilal Oswal NTDOP well regulated. The Securities Exchange Board of India (SEBI) regulates the alternate investment fund AIF in India. The AIF must intimate any material changes to SEBI within a reasonable time. However, NTDOP is not supervised or regulated by the stringent rules of SEBI as it is with equity mutual funds. Hence, at best, Motilal Oswal NTDOP is a SEBI registered investment product, but as a class product, it has less transparency and no stringent regulation when compared to mutual fund product. Filter 2. Does Motilal Oswal NTDOP have a good track record? It has a track record of 15 years. It has generated alpha in the long run. It has consistently followed the investment strategy. The performance in the short run is not satisfactory. By looking into the return, it clearly shows it could not outperform the index in the short run. Filter 3. Is Motilal Oswal NTDOP simple and transparent? A private placement memorandum (PPM) is prepared with key information. This PPM is not available to general public. It is offered for institutions and high net worth individuals. There is no consolidated data available for investors. Motilal Oswal NTDOP also lacks transparency and has a complicated working procedure, whereas equity mutual funds have complete transparency, which make it safe for investors to invest. Our final verdict on Motilal Oswal NTDOP. By diving deep and analyzing from all angles, we can observe that NTDOP Category 3 has a strong investment strategy with high concentration of large and mid-cap stock. It has a little complex fee structure and a moderate return. As per our assessment, NTDOP has not passed the fundamental triple filter test. It is a complicated product made for sophisticated investors. It lacks transparency that any rational investor desires. Moreover, the 1 crore minimum investment is not an insignificant amount to an investor by any degree. Motilal Oswal NTDOP is a viable alternative only for those seeking high return, high risk vehicle. Do not opt for this type of investment in the hopes of diversifying your portfolio because it defeats the purpose and increase your portfolio's risk. A detailed blog post on this topic is available in our website, and the link is given in the description box. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming enlightening investment webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.